Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. So Tesla reported blowout earnings today, as many people expected, except for Wall Street analysts whose estimates were for a loss. So Tesla was profitable, which puts them up for S&P 500 inclusion, something that everyone else has been hoping for, but I don't think is actually that important. I'm more interested in Tesla's Texas Gigafactory announcement that they confirmed today. And in this video, I wanted to also go over some of the highlights from the quarter and some of the really interesting things that Tesla is working on. But before we begin, please hit the bell button to subscribe and be notified of upcoming Tesla videos, and smash the like button to help support this video. We'd super appreciate that. You can also support us further on Patreon at patreon.com/themarketisopen, where we give a shout out to our patrons at the end of each video. So Tesla stock moved up about 4% after reporting their quarterly earnings. They earned 50 cents per share of GAAP earnings and $2.18 per share of non-GAAP earnings. Wall Street was actually expecting a loss of 11 cents per share according to Yahoo. So $2.18 versus a loss is quite the difference. But that's good. I hope that analysts continue to be far off the mark. So if you add up the last 4 quarters of profitability, you get about $7.24 per share of non-GAAP earnings. So for people that said that Tesla isn't profitable, now they have $7 per share of earnings. So suddenly they have a full year of profitability for the first time. Now, the difference between GAAP and non-GAAP is mainly share-based compensation. It's a real expense, but analysts don't use it for their forecast because they really can't predict how much compensation the company will decide to give its employees. In this case, most of it is attributable to the CEO pay, and I think the CEO deserves it when the shareholders are also sharing in the stock price appreciation. Now, talking about Tesla's financials, cash went up again to $8.6 billion. Now, they did cut salaries and other things, bonuses, this quarter, so that helped them, but that is going to be going back to normal in Q3 in the current quarter. Now, Tesla is working on 3 factories on 3 continents at the same time. Elon wanted 1 factory per continent, so they already have one in the US, but now they're starting a new one, so that's hopefully going to be ready later next year. Now, in terms of some of the highlights or interesting things, average selling price per vehicle is down. However, manufacturing improvements with Model Y and the China Model 3 helped profitability, and so did software and connectivity revenue. So it's nice to see some high margin connectivity revenue. Of course, software is also related to FSD that people are paying for, but Tesla also really needs to expand its software business going down the road, and we'll talk about that a little bit more in a moment. Now, cash increased, mainly driven by cash flow. Of course, that's true. I think Tesla has plenty of cash right now. Elon said something funny on the call, like our goal is to avoid bankruptcy, but Tesla is clearly generating cash, so that's sort of off the table. And so unless they have some big project that they need funding for, I also don't think that Tesla needs to do a secondary offering, though if they did, it would barely dilute shareholders. So going over Tesla's operational summary, production and delivery numbers we knew. They delivered 90,000 cars. That's very impressive given all of the shutdowns. Now, solar is pretty low at 27 megawatt hours, but maybe that will pick up in the second half. They talk about how solar roof deployments are increasing, but that's not really meaningful at all yet compared to other parts of the business. Now, energy is pretty good, and again, they were shut down for half the quarter, so 419 megawatt hours for energy. Supercharger stations still grew 6%, and so did connectors, so 17,000 to 18,000 in the quarter. That's pretty huge, especially when you look at competitors. Some of the largest competitors only have about 2,000 in total. So Tesla basically put half of what the competitors have in a single quarter. Now, so they continue to grow superchargers stations like crazy, which I think is really good. Superchargers sell cars, believe it or not, as well as service centers. So this is my favorite chart here. I put the new one on the top left. The old one is on the bottom right from the last quarter. It hasn't changed too much. They are announcing a new factory for Model Y and the Cybertruck, which is pretty cool, but we'll have to wait for the factory to be built before Cybertruck hits the market. Still, that's in line with expectations for the Cybertruck timeline. For Roadster and Semi, it seems that Roadster may be at the Fremont factory and Semi might be at the new factory. I'd assume they'd have started with the Semi at Fremont, but perhaps there's limited space and capacity there, so a new factory would sort of give them a fresh slate. Now, they are adding new equipment at Fremont to get capacity to 500,000 vehicles, and that's why the star is next to the 400,000 number. It was actually there last quarter as well. So they say the Model Y line is at capacity, so that's very positive news. They're going to be adding more Model Ys, basically. They did only produce 6,000 Model S and X in the quarter, but that may bounce back in Q3 because, of course, they were shut down. In China, the Model 3 is now the best-selling EV, and they are eating into BMW and Mercedes' market share. So these are the big boys, and Tesla is sort of attacking them. Now, they say that they're implementing further structural improvements and learnings from prior factories to Berlin. Giga Berlin's going to be pretty sick, I think. The factory will be cutting edge, and the cars are probably going to be beyond anything any other automaker has seen. So a real surprise for German automakers, I think. The bears say that there's no demand for cars in Europe, so why build a factory? But Tesla actually says that Germany is one of their largest European markets. So that's going to help cut delivery costs and other fees and stuff for cars being shipped from the US as they currently are now versus making them locally. Now, in terms of autonomous driving, Tesla released traffic light and stop sign recognition a few months ago, and now the cars are starting to be able to drive through intersections without driver confirmation. So this is something that we knew, and we'll talk about a little bit more as we go through the analyst questions. Now, Tesla says that range is very important for switching from a gas car to an EV. I think range is important, similar to how iPhone thinness was important when phones were very bulky. Eventually, the focus will switch to software, but right now it's mainly about range. I love how they compare the Model S with the Porsche Taycan. 200 miles of range versus 400 miles for the Model S. So twice as much range versus the Porsche, despite the Porsche costing twice as much. They also show how close the Model Y is compared to the long-range Model X. So I think that is going to contribute to cannibalizing the Model X, which so far has been Tesla's only SUV. However, it is the Fabergé egg of cars, and it's already being produced in low volumes anyways. Now, I find this exciting for the energy division. Tesla says that the Megapack became profitable this quarter. Tesla installed 419 megawatt hours of energy storage, up from last quarter. But again, I'm looking towards next quarter to see what they can do when they're not half shut down. Tesla also began trading energy using their auto bidder software in Europe and the US and Australia. We made a video actually discussing Tesla's virtual power plant, and auto bidder basically controls the entire experience for power generation companies in terms of trading power and turning on and off the batteries. So go check out our other video to learn more about that. In terms of solar, Tesla's panels now cost $1.49 per watt, which they say is 1/3 less expensive than the industry. And Tesla says that the solar roof installations tripled in the quarter. Now, it is coming off a very small base, like going from 1 cent to 3 cents is also a triple, but Tesla does need to start somewhere, and that seems to show that they may have finally started ramping up the solar roof and getting their installation teams together, so that should be fairly meaningful, but they do have a lot more work here to allow this thing to move the needle. Now, in terms of Tesla's outlook, Tesla sort of lowers expectations by saying that there could be more disruptions going forward, of course, with suppliers. The team pulled a lot of rabbits out of hats, according to Elon this quarter. They also say 500,000 deliveries is going to be a much more difficult target to hit now. That was the target that they set, I believe, last year for 2020 deliveries. But because of the disruptions, that's going to be a little bit more difficult, but they are still going to try. So that's exactly what I was expecting them to say. I don't think that they're going to really hit it, but they could be very profitable if they get even close. Now, Tesla's product update is that the Model Y from Giga Berlin and from Giga Shanghai will be delivered in 2021. You can see the new robots here for the Model Y factory in China. They also plan to begin delivering the Tesla Semi in 2021. They didn't specify when exactly for any of these vehicles, but that's still exciting news nonetheless. If you think about it, in a year or a year and a half from now, Tesla will have 3 new sources of vehicles for delivery, which is simply incremental revenue for the company. So for the full year, if you look at the last 4 quarters, Tesla earned about $7.24 per share of non-GAAP earnings. That's their 4th consecutive quarter of profit, meaning that S&P inclusion is now enabled. Zachary Kirkhorn, the company's CFO, talked about them releasing $48 million of FSD revenue into the income statement, and they're going to continue doing that as they recognize revenue because they're releasing new features for FSD. $428 million was from regulatory credits, and he says that 2020 will actually be double that of 2019. So that's sort of free money for Tesla in the meantime. Tesla is planning to build more capacity as well for batteries, since they say they are production limited, and that, of course, we're going to talk about more during Battery Day. Okay, so let's talk about some of the highlights and interesting things from the conference call. Elon says that Texas Gigafactory is underway, so they've chosen Texas as their location. He says that construction started this weekend, but it seems like they're in the extremely early phases. Cybertruck, Tesla Semi, Model 3, and Model Y eventually will be produced at this factory, and of course they're going to be servicing the east coast of the country. So this is actually a little bit different than what the report says. Elon seems to just be telling everybody what the plans are. In terms of California, Model S and X worldwide will be produced here. Those, of course, are high-end vehicles. and the 3 and Y will be produced for the West Coast from California. It seems that the Roadster, the Tesla Roadster, may be a future project at the Fremont facility, but there wasn't really a timeline set for that. Okay, so now let's go over a couple different questions from institutional investors to start. So a question about how Tesla will sell more cars. Elon's not really going to comment on the detailed roadmap. That's actually something that we said in our last video when we went over some of the questions that investors may have asked. Now, he does mention a compact vehicle of some kind, so that does seem to be in the roadmap. Of course, he's already mentioned it. He says that that's probably going to be built in China. And so the China factory is probably going to start working on that, and probably Berlin will work on it as well. He does say, however, that there's still a long, long way to go for the Model 3 and the Model Y, and of course the Cybertruck and the Semi. So people are sort of writing that off and going on to the next thing. But those current products seem to have a huge market that hasn't been tapped yet. The next question is about software at Tesla. They say that full self-driving, of course, is the most important thing. Elon says that it's going to make your car 5 times more valuable, or at least it has 5 times higher utility. That's certainly true. And it's going to be enabled via OTA update, as it currently is enabled. Everybody gets updates via OTA. And so when things become full self-driving, then what are you going to do in the vehicle? You're going to look for things to make you more productive and to provide entertainment. That, he seems to say, is when Tesla will focus more on software. But he does say that that's in the future. So that seems to show that Elon still does think that this is a ways away. However, Tesla is working on putting the plumbing in place to scale other areas. So like premium connectivity, for example. They also have the acceleration app where you can pay to have your car accelerate faster, getting rear heated seats via OTA. So all these things are pretty cool. And Tesla seem to be putting the plumbing in place for that to expand in the future. There is a question about full self-driving milestones. So Elon does talk about going from 2.5D to 4D, so 4 dimensions, which is basically video, like 3-dimensional plus time. So an architectural change hasn't been rolled out yet to anybody, but they are working on that. It's basically what we talked about in our last video, looking at individual frames or individual images versus video surrounding your vehicle. Is the difference between these two types of technologies. So they are planning to roll it out possibly later this year, but it didn't seem like that was a very good confirmation. However, even once they roll it out, there is still going to be a long march of getting more nines of reliability, like 99.9999 whatever percentage is very important for them. So this is sort of the base, they're the bottom of the pyramid, and then they're going to have to train it with all the data that they can, and there's going to be still a massive amount of work to reach each magnitude of reliability. The next question, somebody wants Elon to follow up on the alien dreadnought idea of the factory. So I think these questions are getting to be a lot better than the ones that I read on Say from the institutions earlier. So the Nevada Gigafactory is apparently Alien Dreadnought 0.5, so it's not exactly there yet. Tesla does say that they are getting way better at making cars. You can see that at Giga Shanghai, and you'll see that even more at Giga Berlin. They are changing the car design to make it more manufacturable. I think Tesla has always said that in the past. However, the internals of the Model Y will be quite different in Berlin. So I think that's pretty exciting. It sounds like they might go with sort of like the wireless Bluetooth type scheme that has been mentioned in the past, that I think Sandy Munro from Munro and Associates was looking forward to when he tore apart the Model Y, and he couldn't find. So that is something that Tesla has been talking about for quite a while, and they didn't really implement. So perhaps they will do it, and that'll save a lot of wiring in the vehicle. So Elon says that vertical integration is key. Of course, we knew that. And they also say that CapEx efficiency is also very important. They are getting more efficient at deploying capital. They're building factories faster and for less money in less time. So basically, though, the main takeaway is something that we addressed in the last video, which is that they need more people to work at Tesla, more smart engineers. All right, moving along to the retail questions. There is a question about energy. Elon still believes that Tesla energy will be the same size as auto in the future. Obviously, that's not yet reflected in the numbers. Energy is still a much smaller division. He does think that battery and solar will be enormous. In terms of Autobidder is autopilot for the grid, for grid-type batteries. And so it has millisecond level grid stabilization, or at least the batteries do. And Autobidder basically enables that. It takes the power from Powerwalls, Megapacks, and Power Packs and makes them useful and makes them all work together for utilities and for people in the home. Now, there is a question about the Tesla Semi production plan. And of course, Tesla is battery constrained. And so the question is basically, how is it that Tesla can now start producing the Tesla Semi, even though they were sort of short on batteries? So first of all, in terms of the Semi, they may use the first units when they start producing the vehicle themselves to prove the reliability, even though their first units sort of already proved that, but they want to prove that at a larger scale. And so it didn't make sense up until now to really build a Semi because Tesla didn't have batteries. They are using the nickel-based high density and high range batteries. Those are required for the Semi. That's very important. Now there is iron phosphate batteries, which aren't as good, I guess. However, because the efficiency of Tesla's, the other parts of their vehicle are very efficient, like the drivetrain and all that stuff, like the motors and the aerodynamics are very efficient, they are becoming more comfortable with using these iron phosphate batteries. I believe those batteries also don't use any cobalt, so they're probably a lot cheaper. And they're a little bit less efficient, but because they're being produced for very cheap in China and Tesla is very efficient, then you might still be able to get 300 miles of range is what Tesla is looking to get with those types of batteries. So that frees up a lot of capacity for the Semi to use the nickel-based, more expensive batteries, and that seems to be the trick on how the Semi is now enabled to go. So Elon basically says that 300 miles is basically the new normal for vehicle range. Okay, moving along to Tesla insurance. So this is actually very exciting. Tesla is working on expanding insurance to other states and later on to other countries, though getting through all the states is going to take a long time. They say that the California product is well received. It's basically a standard insurance product plus a little bit of some unique elements for specifically Tesla vehicles. So they say it's basically version 0.9 and they're working on version 1 of insurance. So they're going to be using car data and the driving profile to assess probabilities and a monthly premium. So I think this is it. This is what everybody's sort of been waiting for insurance, for Tesla to actually finally implement and use their data to determine insurance prices. And something that I said in a past video was that, and it's probably obvious to Tesla, was that giving feedback to the driver is also very important. So if the driver isn't driving properly and the insurance price may go up, if you tell them how to behave better, you can lower their insurance once they can lower their own insurance once again, and that's how Tesla can have cheaper insurance than everybody, especially for good drivers. Now, they delayed moving to other states to put more effort into this telematics product before rolling it out. And so they plan perhaps to roll it out to a handful of states by the end of the year if all goes well. Also, in terms of repairing the vehicles, sometimes like a bumper, Elon was saying, could get destroyed and the repair could be extremely expensive. And so they could even adjust the design of the car and how the repair is done to reduce costs. So I'm very interested to see that because it does cost a ridiculous amount of money to repair vehicles, and it seems like Tesla may work on a way to fix this. And so Tesla can really disrupt the insurance business here, I think, and probably repair shops that overcharge as well. Elon does say that they are planning to build a major insurance company out of this product. So I think this is going to be a very meaningful product. I mean, think about how much you pay for car insurance for your own vehicles. Probably a lot of people pay a very meaningful percentage of your car's yearly expenses is insurance. Okay, so the analysts sort of ask boring, boneheaded questions, so I'm going to try to pull out the highlights from here. There is an analyst who asked about the gross margin updates. I'm surprised Elon didn't explode here. So when factoring in autonomy, industry-leading margins is probably going to play out in terms of EV adoption. So I think that's what they're planning for the future. Elon talks about value for money versus affordability of the vehicle. Like, this is something that he's also talked about in the past that people didn't really understand. But he says you can build this awesome thing, that has great value for money. However, nobody can afford it. Like, it's great value, but it still needs to be affordable. It needs to be at a certain price point where a lot of people can actually buy it. So what bugs Elon a lot, which I'm pretty happy about, is that he says that he believes the cars are still not affordable enough. And so they are trying to make progress in lowering the price of the vehicles. So Elon Musk says that right now they do want to be slightly profitable and maximize growth. And I think that's a great balance between profitability and growth. And that's very similar to what Amazon does right now. If you see opportunity, you want to invest your money and you're not going to be as profitable. But if you're taking market share and growing your company, then that's great for the future. The next question is about demand. Analysts are always concerned about demand. Elon says demand is not our problem. So finally, we're very clear on that. Even more interesting is that they say that they're installing the world's largest casting press, and that's going to be assembled at the Fremont factory to make one-piece rear body castings. So I think that to me is one of the most exciting things. In terms of bottlenecks, supply chain and production issues seem to be the bottlenecks right now. Demand is not a problem. However, part shortages, especially from other suppliers, especially if parts of the world are affected, then that's going to be a problem right now for Tesla. The last question is about Berlin factory capacity. And so will they have local cell production? And it seems that it will have local cell production eventually to serve the Berlin factory needs. And they mentioned talented people again, as we said in our last video. That's very important for Tesla to get as many talented people as possible because there is a bit of a labor mobility problem in Europe. Alright guys, I hope you enjoyed this video. Let us know your comments or questions in the comments section below. Please hit the like button, we'd super appreciate that. You can also hit the bell button to subscribe and be notified of upcoming Tesla content. And you can check us out on Patreon and support us even further at patreon.com/themarketisopen, and we give a shout out to our patrons at the end of each video. Thanks so much for watching.